We went over this. No top wick. Top went to avoid it. I just it's situational. You got to break through a couple of ranges. I got to see volume on the smaller time frame and the higher time frame. I got to see a previous smaller time frame candle, like let's say, all right, I got to see a small. I got to see a higher time frame candle. Let's say we see this, right? Let's say we see something like this. That's a fucking massive push here. But let's say we break below the range. You'll see a lot of this in New York. Typically, within this area, if you're looking, if you're looking for a no wick entry, just off the rip, you don't need a top wick. Typically in this area, you'll have a smaller time frame that'll, whether it's 15 to 30, that'll close like this or like this. Like if you have this wick on a previous candle, tap in the previous higher time frame resistance, but on a smaller time frame, right? If you've grabbed those, there's a chance you don't need to make this wick again. Next candle, if you close like this on a 4 hour, and this is your final, like let's say 5 minute or the 15-minute candle, and you just blew through two ranges, highly likely you're gonna need to tap. I'm sorry, I'm gonna bring this up so it's gonna look weird, but highly likely you're gonna need to tap the next support. So let's do this, right? Let's say you blew through two ranges. You're going to need to tap the next support. And if you're going to need to tap the next support, right? If you're over here, and let's say this was like this. Sorry. Before you can already see that before the market makes a decision here, it's going to have to come down, whether it comes up or comes down, right? Because you'll never see a candle just not never, but probability wise, it's highly unlikely. You'll never see it just come back up right here. You'll typically, if it's going to come back up after a massive push down like that through two ranges, now you have top wicks also on the smaller time frame rejecting and coming down. Typically, you'll break the low of the previous candle, and it would also make sense because there's a support there to bounce off of, right? So you're like, all right, we got to get down there for it to do anything. The market also takes time, right? So it'll come down, it'll come up, it'll do all this, right? Before it actually starts to turn around. Like it doesn't just come up or come down. Higher time frame moves, they take a while to turn around. And if this is your closure on an hourly or a 4 hour, it's going to take quite a few 5-minute candles to turn back around. And that turnaround happens in the shape of this bottom wick, right? What's a wick? It's a range. So you're creating a range. You're coming down slowly, you're coming up slowly, but right, this wick is a range. So you have to interpret that wick on a smaller time frame. And if you understand that you're going to have to break this low, you got to see how much room you have to come down here. If you understand you have the next support you need to tap before you turn around anyway, whether you come up or down, because the candle might open with a top wick, and that's where you manage risk. You're like, fuck, it's driving again. But you got to understand that it's going to have to tap this area before it does anything, right? Unless you're getting that closure like this, then all right, then you've broken structure. Then that's a really good area to take that sell off the rip with all these things and all that, all those things falling in line. You can just take it off the rip, and a lot of the times the candle will do this. It'll come down there. Oh, whoops. Yep. It'll come down there, and then it'll start kind of slowing down a little bit below. And you want to be part of this drive, right? The initial drive, you don't want to miss it. And if you understand that, you also have to be okay with the drawdown. Understanding, yeah, there's a chance it pulls up, but the probability of it tapping or breaking this previous low is still on your side, no matter how much drawdown you see. So you might be seeing negative, right, in money wise, but that doesn't mean you're behind in the trade. Probability wise, you are still ahead here in that whole area. Even if the market is doing this, probability wise, you guys start to panic because this is a massive range. This is what, 80, 90 pips. But probability wise, until you're closed back up above here, and until the next candle attempts to come down, and until it flips back up, you're ahead. You're ahead probability-wise. You're still likelier to come back down here. At this point, when you're here, you're likelier to come back down here than you are to come up here. You have to understand that. If you understand that, you'll end up holding the positions, the winner positions longer, and you'll end up cutting the losers short. Likelier, yes. Probability. Probability is on your side. No matter how much drawdown you're seeing in that pullback, probability is on your side to tap that next support before ever making its way up. You'll need to reject. Understand?